All right, I'd like to call to order this special meeting of the Solvang City Council, Wednesday, January 22nd, 6:30 p.m. Can I get a roll call?
Thank you, Mayor. Mayor Pro Tem Clark.
Here.
Councilmember Diarnes. Here. Councilmember Johnson.
Here.
Councilmember Waite.
Here.
Mayor Toussaint.
Here.
For the record, Mayor, all present.
Karen, do you mind leading us in the pledge?
Sure. Please join me in the Pledge of Allegiance to the United States of America. I
Pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Okay, we'll start off with public communications, written or verbal. I have one speaker slip. That's Skip.
Mayor Toussaint, council members, I want to apologize that I did not stick around at the last meeting with the discussion of the SCVB and the appointment of Art Sevtap to the board of the SCVB. And the only question, I have a question, and it is, how does an individual go out and apply for the new board for the new SCVB? Because I did not see any notices in either the paper or the posted on any of the bulletin boards in Solvang. So I do admit that I don't do a close examination of those items, but I would like to know if how to apply, and several people have asked me they need to apply to be on the new SCVB. And that's just a question I have, and that's all I have tonight. Thank you.
So I'll do my best to lightly just address that question. The reason why there's even board members on the SCB is really just part of asset recovery and cleaning up that there. I'll let the city attorney comment on anything else because I am not a legal professional. But as for actual steering type items relative to tourism and Solvang, I believe that IDK would now be coming up with more of a steering committee. There would be a much larger board of different people from different businesses in the community, or even residents. You know, it's gonna be larger than 5, to my understanding, and possibly even a branding board to help actually steer things moving forward. But that's all in the works right now, and that was talked about the last meeting during the IDK item. Chip, I'll let you comment on anything else, but I think that's a good question for the public to understand.
Mr. Mayor, I think you answered it absolutely perfectly, covered it completely. The SCVB will be having, though, at least one or more board meetings because you do have some cleanup things that have to be done that were left undone, bills paid, things like that. And that meeting will be posted there outside and on the website, and so you're welcome to come to that meeting.
And that's another point. Any SCB meeting we do have is actually posted with notice on the city website, the same area the council meetings are posted, and they're also available on video. I believe there's only been one to this date, but you can go on there and find it. And when the next one is held, it will also be available on the YouTube live as well. So, but we definitely want to make sure that no vendors are left out there hanging owed money. There's, I think we had an outstanding copier and, some other things out there, but that's what we're getting taken care of. With that, we'll move on to the normal agenda. We have item number 2, the fiscal year 2018 financial highlights and comprehensive annual financial report, I believe delivered by our new CPA auditor. And do we have a presentation?
That's correct. I see that our new auditor, Ahmed Badawi, is here to present the 2018-19 financial comprehensive report.
All right. Good evening. My name is Ahmed Badawi. I'm the audit partner on the audit of the city of Solvang, and I'll present to you the results of the audit today. Are we going to have maybe on a slide, on a presentation mode, slide mode? Excellent. All right. Thank you for having me. So What I'm going to cover today, I'll let you know who the engagement team was, what were our deliverables and the scope of our audit, areas we emphasized on during our audit process, the type of audit opinion we issued, and summarize for you some of the numbers in your financial statements, provide you some of the required communications as your independent auditor, and then see if you have any questions for me. Of course, feel free to interrupt me at any point. So I'll start with the engagement team. Like I said, I was the engagement partner. That means that I am the person ultimately responsible for the audit, from supervising the audit team to ensuring that the audit plan is carried appropriately to obviously communicating with city management. We always have a quality control reviewer. This person is in the background, and their role is to review my work and the work of the audit team, also review the financial statements, and make sure that we adhere to professional standards. We have an IT specialist. We don't always use that individual. We didn't use him in the city of Solvang, but we have access to him in case that your IT infrastructure is just complex enough for us CPAs that we are not able to evaluate it. And what I mean by IT infrastructure, we are obviously only focused on controls over the financial reporting system. So who have access to what, who grant access to what, backup procedures, those types of things. We had a manager, Mitesh Desai, on the audit, and we also had a senior assigned to the audit. So that was the engagement team. Deliverables, we were engaged to provide an opinion on the city's basic financial statements, comprehensive annual financial report. Because the city is subject to government auditing standards, we are also required to issue an opinion on our consideration of the city's internal control over financial reporting and on compliance with laws and regulations. And then finally, we perform an agreed upon procedures on the appropriation limit, or the GAN limit, and that is the limit that determines how much the city can budget in the future from tax revenues. And then finally, communications with the governing body. This is what I'm doing today, and normally we issue a letter, for the most part is boilerplate, summarizing the communications that we're having today. Areas of primary audit emphasis. So we had, even though we look at every account in the city's accounting records, we make decisions on those accounts as we go through them. Some of them we may decide to confirm with third parties. Some of them we may decide to do some testing on. Some of them we would do analytics and compare to prior year and investigate fluctuations. But those specific areas were of higher risk, and just wanted to highlight those to you. They're not necessarily unique to the city of Solvang. They are common areas of risk in a lot of audits that we do. The first area is management override of controls. So management are the one responsible for designing internal control over financial reporting. They are responsible for monitoring those controls, and they can choose to override them if nothing would stop them from doing that. We're not saying that this has occurred, but it can occur. So we have to design our audit procedures to mitigate that risk to a certain extent. What we try to do is we try to incorporate an element of unpredictability in the audit process. So not every year the same tests, the same accounts. This is our first year with the city, so we didn't really get a chance to mix things up a little bit, but obviously in the future we will be rotating and changing procedures slightly. Also, we review all journal entries prepared by management, make sure that they are properly supported. We review estimates prepared by management and make sure that there are no bias behind those estimates. We make sure that we assign experienced individuals to more complex areas, in addition to a variety of other procedures that we will do in that area. Revenues and receivable is another area that by default, by professional standards, is an area of a higher risk. I guess our professional standards feel that people tend to like to have more revenues and less expenses. So the motivation to inflate revenues are always higher than the motivation to inflate expenditures, for example. This is for us, we don't try to justify that it's not an area of high risk. We just take it as is and perform our procedures accordingly. And oftentimes we rely a lot on confirmations. So we confirm with the county all the revenues submitted to the city. We reconcile it to the city's accounting records. We are able to log into the state website and download sales tax information and compare that to the city's records. We confirm with hotels, with other businesses, the amounts they pay to the city, and so on. And then finally, pension is an area that the accounting is complex by nature in that area, and the dollar amount is significant. So we consider that to be an area of emphasis for us. So we review the accounting entries prepared by management to record those activities. We communicate directly with the auditors of the pension plan. We obtain reports from them regarding how much money the city have invested with the plan. We also reviewed and obtained the actuarial assumptions from the CalPERS auditors. I think other than that, moving on to the auditor's report. So we have issued an unmodified opinion. For those of you who are not familiar with an unmodified opinion, it is basically a clean opinion. The opinion state the principles that we followed, and we have followed the generally accepted auditing standards and also the government auditing standards. And an unmodified opinion means that we believe that the financial statements are fairly stated in all material respects, that all estimates are reasonable, all disclosures are properly reflected in the financial statements, and that accounting principles have been consistently applied. I wanted to summarize for you some of the numbers in your financial statements. So on this slide here, and again, please keep in mind this is a 30,000-foot view of the entire city operation. We're not focusing on any specific fund, and it's a full accrual basis. So depreciation, expense, and those types of things are included in these numbers. So on this slide, you will see the composition of the city's assets over the last 3 years. Like most cities we audit, the biggest assets you have are your cash and investments and your capital assets. That is expected. You maintain cash reserves to be able to respond in case of emergencies, and you build infrastructure and streets and roads. So those are expected to be the largest assets. No major fluctuation or activities over the last 3 years. Fairly consistent. So nothing really for me to comment on here. Same with the liabilities. This is the composition of the city's liabilities over the last 3 years. Obviously, the largest liability is your net pension liability. That's the case with almost every municipality we work with. I have to say that is not a shocking number for me at all. I have seen numbers where you can add 2 more zeros to that, and it still would be not the full pension liability. So, of course, those are larger cities, but even for your size, I am not, I mean, it's a liability, obviously, and you have to address it. I'm just saying that I've seen bigger numbers. That's all I'm trying to say. Other than that, again, for the most part, fairly consistent. We have seen throughout the CalPERS system that the pension liability did not change much during this year. So not just for Solvang, that is a consistent trend we're seeing in everybody else.
Is that primarily driven by the discount rate not moving?
Well, and also, I mean, you know, you made contributions towards the plan, so you would have expected that the liability would have gone down a little bit, but obviously there are other factors, investment returns, you know, any changes in assumptions that they have made, or you know, those types of things. So it's really a combination of factors. But clearly that whatever happened in the plan offset contributions and payments on the unfunded liability that has occurred, because for the most part, it didn't really change much. I am not aware that there are future plans for changing the discount rate, at least for the next year. So obviously, beyond that, it's possible. The coming slide here is just the equity, so the city's assets minus liabilities. And the only thing I would like to highlight in that slide is that even though you may have equity of close to $50 million, they're not really all in a spendable form. The biggest category, the net investment in capital asset, this is the amount that the city has invested in your streets and roads and buildings and other assets over the years, minus any debt that was issued to acquire or construct those assets. So this amount, in reality, it would never be converted to cash. Unless you're able to sell your streets and cash out on those, most likely it would never be converted to cash. Restricted amounts are amounts that have legal restriction on them. And that can be either a bond agreement, it can be unspent grant money, it can be gas tax money, and so on. And then the unrestricted category is the amount that is really under the council control. We're not saying that you have 20 million that are not designated for any purpose, but there are no legal restriction on them. So if you decide that you want to use them for something else, you can always do that. So I just wanted to highlight that. The fact that your number, your unrestricted number, is a positive number is by itself a positive sign. And the reason I'm saying that is because a lot of the municipalities that we audit, when they implemented the new pension standard and the new retiree medical benefit standard, they had to put a lot of unfunded liabilities on their balance sheet that really wiped out any unrestricted net position that they had. So a lot of them have deficit net positions as a result of it, of putting those pension liabilities. So the fact that you're still negative is definitely a positive thing that probably put you slightly above average of what we see with other cities. So,
And can you just quickly explain on the restricted column there,
The increase.
the sudden jump there?
you know,
I know we have expenses like the 1.5 million for the wastewater treatment plant environmental study, and I'm just curious what the drivers are.
let me take a quick look here. I actually can't think of it off the top of my head.
Does that also
it would not-
include- Does that also include the restricted also funds that came in, for example, like the tennis courts, that we got money in that's restricted to reduce? I mean, is that stuff like that, or?
There has to be like a legal restriction. So yes, if you're contributing, if somebody's donating money to the city and saying you can only use it for that purpose, then yes, it would be
Okay.
included in that category. I'm just trying to look up to see what the
Didn't we get like
increase
almost a
in
$500,000?
Something
Donate-
like that.
something
Well,
like
I
that.
mean, it's 3.3 million, 3.2 million.
Yeah. Well, did they all add up? Like if it was a plant?
I would think so.
Well, that would normally, and I'm sorry that I don't recall it right off
That's
the
all
top of my head, but I can definitely look it up. But that would normally be the result of either issuing a new debt, for example, and you haven't spent the money yet, or getting a grant and you haven't spent the money yet, or something of that nature. But I can definitely,
Great. would be
probably when I get back to my hotel tonight, I'll be able
Great.
to look it up and probably email Tanya, and she can maybe share the information with you.
Perfect. Thank you.
I think other than that, change in net position, again, this is on a full accrual basis, so revenues over expenses. This year, and it's kind of hard to explain, but your pension expense actually was higher this year, and it really have nothing to do with the city, but normally, because you're part of a pool with CalPERS, so sometimes they will come and tell you your percentage of the pool is 5%, but then they would come the year after, then they would tell you your percentage of the pool is now 5.5%. So that 0.5% of change impact your pension expense. So sometimes this have nothing to do with anything that the city did, but it's just the way CalPERS work and how it does its calculations. Sometimes those pension expense numbers do fluctuate up and down. That was really the main reason for that change.
Pension driven.
Pension driven, yes. And then here, this is comparing net cost of service to tax revenues. And net cost of service is the cost of running all city departments minus any revenues that those departments bring on their own. So grants or fees from users or so on. The idea is to see how dependent are these departments on tax revenues. And of course, all departments are dependent on tax revenues. So the question is whether your tax revenues are sufficient to cover that cost or not. So this is just a comparison over the last 3 years. Your tax revenues have been fairly consistent. Your net cost of service, again, the pension expense is increasing that net cost of service. But for the most part, your tax revenues have always been consistently higher than the net cost of service. So that's just FYI. And then if we were to just focus on the general fund. So the general fund is a very important fund. You probably are aware already because this is where all your unrestricted resources are residing. So it measures the city's liquidity and financial health. You can clearly see that your general fund is very healthy. What we normally do is we look at your unrestricted fund balance in the general fund. the amounts that have no legal restriction on it, and we compare that to your annual expenditures in the general fund. The idea is to see, in the very unlikely scenario that all the revenue sources stop coming in, how long can you continue to pay bills using your existing fund balance? And we have determined that you can probably continue to pay bills for the next 15 months. And that's, you know, quite a healthy number to have. The GFOA, or the Government Finance Officers Association, recommend nothing less than 2 months. Or I don't want to say recommend less than 2 months. Let me put it in a different way. If you have less than 2 months in your fund balance, we will have to consider whether we believe that you can continue to pay your bills on time or you may default. And most likely you will end up with something called a going concern opinion, where we believe that you may not be able, you may file for bankruptcy within a year or so. So you definitely don't want to be in that category. Clearly you're very far from that. 15 months is definitely above average of what we see.
Have you issued a lot of going concerns with cities?
Yes, yes, absolutely. I have.
I didn't want to get specific.
Well, I didn't audit. You said Stockton. I didn't audit Stockton, but I know that they have a going concern. But I do have. I want to say 2 cities that actually have going concern. So. And sometimes a going concern can be only on one part of operation. So you may have a going concern on your water fund, for example, and water operation, but not on the rest of the city operation. So that can be possible as well. All right, so here is focusing on pension. This is just a summary over the last 3 years of the contributions that the city made to the pension plan. Remember, this is not the pension expense. Pension expense is calculated very differently. This is just the contribution that you made to CalPERS. Funded status of the plan. The first column are how much assets the city have invested in the plan. Second, or the middle one, is the total pension liability. And then the third one is the unfunded portion, and that's the amount that you have on your balance sheet as a liability. CalPERS is always 1 year behind in measuring the liability. So that's why you see we say 6/30/19, that's your fiscal year that we audited, but your pension numbers were really measured as of 6/30/18 for that year. So we're always 1 year behind.
Ahmed, is it possible to, in future presentations, to present what the unfunded liability would look like at 6%? It's in the CAF report, and I think people need to see that based on the current returns from CalPERS, which is really in the neighborhood of 6%, why not use the discount rate of 6%, at least side by side, so people can see the range?
So I have it right here, same like the CAFR. So I wouldn't know what the results would be at 6%, but CalPERS provide basically what the results would be at 6.15 and 8.15.
It's actually in our on the CAF report that they issue for Solvang. So I'd be happy to share that with you.
At 6% exactly, or
6%,
6.15?
yeah. No, 6%.
Well, I guess maybe because the 0.15 is more.
Yeah, I mean, I don't care. It's 0.15.
Administrative cost. So, but I think we may be talking about the same number, because the return is 6 plus 0.15% for, I believe, investment expenses or administrative expenses. But you're right. On this slide, what I was going to highlight is that pension liability is an estimated number, and it's very dependent on assumptions that are made by actuaries. One of the most significant assumptions is a discount rate. And it's so significant that accounting standards require us to disclose in the financial statements what would the results be if this discount rate goes up by 1% or down by 1%. And you can see that if it goes up by 1%, your liability is almost cut in half. And if it goes down by 1%, again, your liability increases by more than $2 million. So it's a very significant assumption. Likelihood that it's going to go up is probably very, very slim. Likelihood that it's going to go down is probably a good likelihood. But I don't really have more information in terms of when would it go down more?
Yeah.
Uh,
But for planning purposes, I think what I'm hearing is it's better to plan on the 6%.
I would definitely say that, that this would be more the cautious thing to do, yes. And what that means for the city in the future is that more contributions. Because CalPERS is always going to make sure that you're putting enough money in the plan for everyone to get paid. So if the discount rate is lower and your liability is higher, that means that you have to put more money now to make up for that. So this is when having 15 months of fund balance becomes helpful. Because cities that have 2 or 3, they definitely lose sleep over that prospect.
Right, so at 6%, according to this, it's on page, I'll give this to you so you can include it in your evaluation, but
Okay.
it's $6.7 million instead of 6.2. It's $500,000 increase. So that 0.15 actually does make a difference.
Okay. So maybe CalPERS did it especially for the city of Solvang?
Yeah,
or-
they always do it every year.
Okay.
I'll send you the link so that
Okay,
you can,
yeah, maybe in the funding valuation, the valuation that ask you, that tell you how much you're gonna contribute in the future. There are 2 valuations that they issue. One is the funding valuation for the city to know how much to contribute, and one accounting valuation, that this is where we get our numbers from for the financial statements. But yeah, I'll be happy to see it.
perfect.
Okay, thank you. Also, the city have retiree medical benefits, and those are the contributions over the last 3 years. And again, the funded status of that plan over the last 3 years. So not as significant as pension, but still. And again, an estimated number, so there are assumptions that goes into that number, and the discount rate is one of these assumptions. So same requirement, we have to show you what the number would look like at 1% more or 1% less of the discount rate. And there is another assumption that is also very important in the retiree medical benefits, is the healthcare trend rates, how much premiums would cost in the future. So again, 1% plus or minus, and what your liability would look like at that time. The next part of the presentation are really just the boilerplate required communications. You probably want that communication to stay boilerplate. Anytime it's not boilerplate means that there are problems, and we're having to communicate those to you. I'm going to walk you through them, but they're going to focus on responsibilities and scope and things like that. So this slide summarizes the responsibilities of both parties, the audit firm and the city. So on the left side is our responsibilities. On the right side are the city management responsibility. Of course, this is not an all-inclusive list. So our responsibility is mainly to issue an opinion on your audited financial statements and say whether they're fairly stated or not. We're also responsible for evaluating the city's internal control over financial reporting and also evaluating the tone at the top. By that we mean, do we feel that management send the right message to the rest of the organization about how important internal controls are, about the consequences of committing fraud, about how important to have timely financial reporting and accurate. Do they respond to audit findings? Do they come up with corrective action plans, or do they just say, okay, thank you, and they file it and they never do anything with it? So all of these things we are responsible for evaluating. We are responsible for evaluating compliance with laws and regulations. We're responsible for ensuring that your financial statements are clear and transparent. And then finally, we're responsible for communicating with the City Council. Management have a lot of responsibilities in this process. So even though you hire our firm to certify the numbers, that does not relieve management from its responsibility for the completeness and accuracy of those financial statements. Our audit is done on a test basis. We have materiality thresholds. Our audit provides a reasonable assurance, which is a high degree of assurance, but is not an absolute assurance about the accuracy of the numbers. So, and that's standard in the industry. Management is the one responsible for establishing and maintaining internal controls, for establishing and maintaining controls that will prevent and detect fraud, inform us of all known and suspected fraud, comply with laws and regulations, and take corrective action on audit findings. So those are, in summary, management responsibilities.
So the city actually prepares the CAFR and those types of items, and then you audit and run controls on those to verify.
So
Is that what you're saying?
The city does the accounting throughout the year.
Right.
In the situation of Solvang, what we do is we take the accounting records from the city and we put them into the CAFR format.
got it.
So it's what we call compiled. So we're not the one deriving the numbers, or we're not the one calculating the numbers. We're just taking the city's numbers and we are putting them into a financial statement format. And that is a good point because it does impair our independence. And when I go to this slide here, I was going to discuss independence and what we do to ensure that we remain independent in that process. So independence is solely our responsibility. We have to maintain our independence. The city does not have to do anything to ensure that this happens. We look at independence in a variety of ways. Independence in substance, where we look at any additional services that we provide the city, including compiling the financial statements. And we have to, and this is one of those services that government auditing standards have identified as a service that will impair independence if no safeguards are put in place. So the safeguards that we do, first we have to evaluate on the city side whether there is an individual who possesses the skill, knowledge, and experience to be able to oversee our service, review the financial statements, and take responsibility for them. Obviously, that person will be Xenia. In addition to that, we cannot just rely on the city side. So on our side, we have to have an independent reviewer review those financial statements, someone who is not involved in the audit, and that's our quality control reviewer. And of course, we make sure that we are not coming up with numbers ourselves in the process, that we take the city's trial balance and we translate that into financial statements. If there are numbers that needs to change, it really needs to come from the city. And it comes by adjusting entries, or if we found an error, then we will let the city know that there is an error, we don't agree with those numbers, and if the city say, okay, we agree, here is the entry to correct it. So that's how we maintain that process. There's also independence in appearance. We don't want the public to perceive us as not independent. So you're probably not going to see us out here at Solvang at night having drinks with city management. Not saying that there's anything wrong with it, but we try to be careful about the appearance. We absolutely do not allow any relationships with city employees in any way, shape, or form. If someone is related to a city employee, we would remove that person from the audit. Absolutely no other types of relationships. So just to maintain the appearance of independence. So that's how we approach independence. And obviously, if we determined that we were not independent, then I wouldn't be standing here. We would have to resign from the audit. So we have determined that we maintain our independence. Okay. In terms of timing, we believe that the audit was performed timely in the time frame communicated to the city. Every year there are new accounting standards that we have to consider. We will discuss with management the new accounting standards. Doesn't mean that they will be applicable. This year, I don't believe that those accounting standards were applicable, but we did have a discussion with management, told them what the requirements are, and we let management make the determination whether they are applicable or not. I mentioned that some of the numbers are estimated, so just wanted to highlight for you some of the estimated numbers. Your depreciation expense is an estimated number because you're estimating how long a certain asset would live. Your pension numbers are estimated numbers. At the bottom of the slide here, just a listing of some of the important disclosure in the financial statements. We encountered no difficulties during our audit. We had some adjusting entries, and management has posted all those adjusting entries. The reason why we're making that statement is because sometimes we may have adjusting entries that are not material, and management may say, you know, we would like to pass on them. So our responsibility is to let you know that there were some entries that were passed, but in this case, there were none. There were no significant risk or exposures relating to events and conditions. We had no disagreement with management, and we had no material weaknesses in internal controls. Before we issued the financial statements, we obtained a representation letter from management. This is a letter management telling us that they have disclosed to us all known facts, they have recorded all transactions, they're not aware of any fraud, and so on. We're not aware of that city have engaged any other accounting firms to consult on any audit matters. Other than our engagement letter and the representation letter, we had no other communication with management. There were no material uncertainties relating to events and conditions, and we have not become aware of any instance of fraud or illegal act. Like I said, we always discuss new accounting standards with management, so those are all the new accounting standards that were issued so far and the year that they will need to be implemented. As we get closer, we will always have discussions with management about those standards. We also host an annual training seminar every year where management obviously would be invited, and we discuss those accounting standards in great depth. With that, I want to say thank you for allowing us the opportunity. It's been a pleasure working with the city and coming to this beautiful city and enjoying it. So I'll be more than happy to answer your questions. I'm actually staying in San Luis Obispo because I'm doing the audit there. So I just drove and I'm driving back.
I've got a question. I think if you go back to, I don't know if it was slide 8, it was back there ways, and there was a significant jump in our expenses. Maybe keep going. Oh, let's see, hold on.
I think maybe you're talking about.
I mean, it was really
Saw which
significant.
one I know which one.
Yeah, that was it. Go back. Wait. Nope.
This one?
Nope. It had all 3 years, and it was a significant jump in expenses. So right there.
So these are
Accounts
liabilities.
payable and accrued expensive, or excuse, accrued expenses. I mean, there's a significant difference from 2017 to 2019.
Mm-hmm. You know,
It could be any. I can't pinpoint any one factor involved there.
You know, I will have to look, but honestly, the accounts payable especially is timing have a lot to do with it. You know, sometimes, so this will include, for example, things like accounts payable, like payroll liabilities, those types of things. So if, for example, 1 year you wrote checks on June 29th, your accounts payable would be much lower than if you didn't write check for a week, for example, where you have much more accounts payable. Same with payroll. If payroll coincided that it came on, a payday came on June 29th or June 30th, you would have a much less liability to record versus if payday came on July 2nd, where you have a full pay period that hasn't been paid that would need to be accrued in that number. So timing has a lot to do with it, but I can definitely dig into the detail and basically get an answer for that. But I think management are really the best to answer those questions.
Right. Yeah. I don't want to.
No,
Right.
I'm just-
So
Ask
one
the
of the
manager.
things we did this year that wasn't done before is that we did accrue payroll. So that could be one of the variables. We also made sure that all contracts that were outstanding but not yet paid were recorded in the financials. So we can look at the details, but those are probably the most likely factors.
But it also makes sense that the last budgeting cycle, it was like record deficits in each category. So it makes sense you'd have some extending liabilities, right, in 2000, because this is the fiscal year ending June 30th. So you'd have, that's still finishing off everything that the prior budget was approved back in 2018, right?
Right. Well, accounts payable would be, everything that's already we're legally obligated to pay, but we haven't just paid the cash out. And then there may be some contracts in that we've already signed off on the contract, but we haven't yet expensed it and paid it out. And then the accrued payroll is definitely something that we didn't used to do, and we did do it, and it was about a third of a payroll. That's somewhere in those numbers.
Got it.
And I just wanted to get back to that restricted amount, because another explanation, it can be that it was just not right in the past. Because I'm looking at what is that source of restricted amounts, and it's mainly coming from the impact fee fund. And normally those will be restricted. And basically, almost 2.4 million is in there.
So maybe it wasn't included in the previous
So
CAFR,
I'm just
or-
saying that a possible explanation is that, because this fund looks like it had similar fund balance last year. So
Oh,
maybe it
okay.
was just
Wrong
not
fund
reported
or
as
something.
restricted last year. But it had a similar fund balance last year. But that's where most of the restricted amounts are coming from that impact fee fund. So.
You said you were offering, you offer like a seminar to go over some of
Yes,
this? When,
yes.
it-
Usually end of July or early August.
okay, are we gonna be, can you advise management of that so we can possibly go? or-
Absolutely, absolutely. And I'm not sure if I may have mentioned to management before. I mean, it's usually hosted in Oakland.
Okay,
So our firm normally for any client who is not located in the Bay Area, we offer them to pay for 2 airline tickets or to reimburse the city for 2 airline tickets to come attend our seminar, just so our clients don't feel that they're treated differently just because they're located geographically in a different area. We have some clients that say, absolutely not, we don't want, that's an independence issues, and we have some that say, no, this is a gift, and we have no problem with that, and we just offer it. But of course, we would love to see management one way or the other attending.
okay.
So.
Are there any questions of this, the CAFR here?
Nope.
Okay. With that, we'll take it to public comment. I have no speaker slips on this. Is there anyone interested in speaking on this item?
Or awake?
Or awake? Seeing none, I'll take it back to the council for discussion and action. I think it's pretty straightforward. Everyone's asked their questions. We could probably just receive and file the report this time. And I think the auditor has a few questions that you'll just follow up with informational that we asked during the meeting with us. Okay, perfect. With that, we'll move on to,
Thank you.
Mayor,
oh, I'm sorry, motion. So I'll make the motion to receive and file the report.
I'll second the motion.
It's been seconded.
Mayor Pro Tem Clark,
Yes.
Councilmember Diarnes,
Yes.
Councilmember Johnson,
Yes.
Councilmember Waite,
Yes.
Mayor Toussaint.
Yes.
The motion to receive and file carries 5-0, Mayor. Thank you.
All right, with that, we'll move on to item number 3. Can I get a title readout and staff report?
Item number 3 is the economic development presentation by Cosman Companies. I understand there's Mr. Kieras here to present.
So yes, as you may recall, a couple of months ago, the council engaged Cosmont companies to do basically 2 tasks. One was the specific site on and around the Vets Hall to analyze the demand and supply and opportunity side for some type of blended use, and the other one was to look at potential next step for overall economic development. So Cosmont is here back with us today to deliver on that contract, and then we can turn the discussion to next steps after his presentation.
Thank you very much, Mr. Mayor and members of the council. It is good to be back. Thank you for having me. Is there a clicker that I could use? Thank you. So we were tasked, of course, with really a bit of the focus on an opportunity site assessment for some property on the, I'll call it sort of the eastern end of town, and we'll highlight that. In and around 1718-3 Mission Drive. That was kind of the focused exercise. The broader discussion was about sort of a citywide overview. So in those phases, that's kind of how I'll present this. The citywide overview, though, certainly takes advantage of all the data that we've collected, which was, much of it was citywide, but then geared toward what the opportunities are for the site that you have, that you wanted me to focus on. So, does this work?
Hopefully.
Cosmont Companies has been in business for 33 years. We're an economic development firm. We do real estate advisory, public-private transactions, and market evaluations. not working? Okay. So this is just our background and scope, which I just went through, but focus on a hotel and/or a blended use opportunity site or opportunity project. And blended use is just my view of how multiple uses can be integrated and should be integrated in today's marketplace as the reality of how many land uses are coming together: residential, hospitality, and many others, office, et cetera. So we have a demographic profile. We've evaluated different components of market assessments for different product types: retail, multifamily, and hospitality particularly. And then we've prepared a SWOT analysis, which is, I'll spend more time on that. This is a long report. There's a lot of data in it. You have it. I'm not going to spend an hour going through it. I could, but more importantly, I think I want to highlight salient points as we go through and then zero in on probably SWOT and some of the potential opportunities and next steps, frankly. So phase 2, as mentioned here, is the citywide overview, which I'll discuss. So as an executive summary, we've got demographics we've evaluated, but you've got an educated, wealthy, sort of older population. Lots of folks come into the city to work more than they do leave. There is demand at the end of the day in our evaluation for hospitality and multifamily, a residential component, and they're well suited for that opportunity site. Solvang, I think this data comes from a few years ago, but may enjoy about 1.5 million visitors. I think with your festivals that you seem to be promulgating, and they seem to be experiencing success, that visitorship's, I'm just going to speculate, is on the rise, which is positive. In the near term, you'll see the number of hotel rooms that we've come up with, but there is demand for in the short term for a smaller or a large hotel. We'll define that a little bit. And then in the longer term, there's demand for a number of rooms, which could comprise 2 to 3 different hotels. Now, some of the data we found was that a lot of the folks that come here are day trippers, so they're not, so where are they driving from, and how long are they driving, and what are they doing here, and then what are they doing in terms of making a decision to leave. So that's an important factor. I think that the culture, the environment, the business friendliness, the visitorship, the festivals that you all are creating can do something to sort of help continue to drive your brand. Next slide, please. The city's general fund is comprised of a majority of transient occupancy tax, TOT, I'll call 50% majority in this case, and 15% from sales tax. And of course, as you all know, you're considered the Danish capital, obviously, of America. Next slide. Okay, so sort of this is broken apart by a lot of analysis and strategy and then implementation of those next steps. Next slide, please. You keep going, because this is a summary of the demos, but I want to get into the demographics. We just looked at some of the radius rings, just so you see 30 miles gets you to Santa Barbara to the south, 30 miles gets you to Santa Maria to the north. Keep going, please. Keep going, drive times. So 5,700 folks generally in the city, 2.39 average household size. These are metrics that I tend to kind of look at. Smaller household sizes, if you look at the state or the county, really more relevantly is 2.88, so 2.9. 46 and a half years old median age, just within your city limits, 108,000, almost 109,000 average household income. If you go to the next slide, Zena, in a 30-mile radius, what I find interesting is you can capture 360,000 people that could come visit the city. Look at their median age, 35.7. So you start to get into this millennial population, which I will talk more about, because there's a millennial population that's sort of like overtaking all of us, if you will. Some of us, I don't know how many are millennials on the council, and how many of us are pretending to be millennials like me. But we need to kind of keep an eye on the future, and it's a very important metric that we look at and talk to a lot of our communities about. So I just kind of point out those ages for you: $107,000 average household income to capture 360,000 people in a mere 30-mile radius. Next slide. Keep going. We drive times. So here's your age profile. The city has 19%, 28% baby boomers, 23% Gen Xers, 19% millennials, and 14% Gen Zs. When you combine Gen Zs and millennials, just as a point of comparison, that's 33%. In our country, we have some 130 million millennials and Gen Zs. The millennials are the largest population cohort in our country. Thank you. I agree with you. Again, I'm pretending to be a millennial, so it's nothing against I think I'm a Gen Xer. I don't know. But here's the point. 40% of the population in our country are millennials and Gen Zs. So when we talk to our communities and when I talk to you all, when we're thinking about not the 5,000 people that live here, we have to think about the 5,000 people that live here. But when you think about 1.5 million visitors, who is coming to the city? So what drives this brand that we're discussing to a degree today is all kinds of age groups. But when you have 130 million Gen Zs and millennials, which is 40% of our population in our country, which is very consistent also with the state of California, they have $750 billion of buying power. Most of the cities we evaluate, they're in that range, 40% of their population. Some cities we've evaluated are 50% population with millennials and Gen Zs. So it's where they live, how they commute, how they consume. It has a lot to do, by the way, with the trend in retail. What they expect out of their hospitality experience. These are very important trends, demographic and generational trends, and it's the reason why I emphasize some of these metrics. Just in terms of a relativity to your population, which is 33% of that 35-year and older participant. And my argument would be of the 1.5 million people that come here, you've probably got more of the 35-year-olds that I showed you in the 30-mile radius, which is 360,000 people. Next slide, please. High educational attainment. Next slide. Some of these slides are obviously graphical representations of things. I don't want to spend too much time on them. Next slide, please. Next slide, home values. So you have more folks, 2,500 people coming into the city than the 1,900 people that leave every day to go to work. So I would suggest that you probably have a strong hospitality and retail presence in terms of people that come into work. Next slide.
I.e. low income or lower income?
Lower potentially. 1.87 jobs housing ratio. Another metric that I like to look at because it says, well, you have some jobs. Granted, they may be at a certain income bracket, but there may be more room for housing at a 1.84 in comparison to the other job housing ratios for the county and for the state. We've seen that ratio far below 1 in other communities where they have a different problem on their hands. Next slide, please. General fund revenues, 50% give or take from TOT, 16% from sales tax. So, I just was with a city earlier today, and they get 0% property tax. That's just the nature of what their structure is for their property tax base, 0. So they're 100% reliant, maybe not 100%, but significantly reliant on sales tax. And what makes me nervous about sales tax is the predictability of it on a go-forward basis because of the change in the format of brick and mortar. So I look at some cities who are highly reliant on sales tax and others that are more highly dependent on property tax, or in your case, transit occupancy tax. It just tells you what is important on your revenue streams. You had a financial evaluation just now. But TOT in the hotel industry is very critical to your city. Next slide, please. Summary of everything I just discussed. Keep going, please. 2/3 of the visitors generally that come here are from California, Southern California residents. 1/3 are from out of the state or out of the country. You have a lot of folks coming here from Pennsylvania, Utah, Nevada. And then, of course, internationally, you clearly are going to have folks coming from the Scandinavian countries. Next slide. Could you go back? There was a report that I took a look at, which was done by RevPAR back in 2014 to help evaluate the feasibility of a conference center, again, particularly focused on this site in and around 1783 Mission Drive. And they concluded with an infeasibility with respect to the Veterans Hall for a variety of reasons. And I'm not going to go over all those, but in my review of it, there was a loss in that feasibility of anywhere from $7 to $23 million. So the conference center concept is a difficult one, and I've got another big question is, how do you pay for those things? $7 to $20 million of project cost. So I did take a look at that, and then just in also looking what your opportunities are, again, as a culture, and you want to leverage your strengths, but does your city, can your city hearken back to sort of things that are going on in Copenhagen, Denmark? I've never been to Copenhagen, Denmark, but there's an urban environment there, there's density there, there's street walkability, et cetera. So, you know, being here makes me think about the akin to your sort of sister city, if you will, across the country. Next slides. So on the analytical side, we looked at about 25 hotels. Here's a map of them in about a 5-mile radius. Next slide, please. And the ones in green are the ones that report. This is very important. We can get data on those 25 hotels. How many rooms, what the address is, et cetera. But the reporting of their occupancy and of their ADR, we can't guarantee that all 25 of those are going to report. The hotels that are listed here in green, which generally tend to be a little bit of the larger hotels, but this is kind of unique, and not so much the independent ones, even though many independent ones here report, they report into Smith Travel Research. And Smith Travel Research is the gold standard for hotel data collection. So we used STR for our data collection, and what you're going to find is of the hotels that report, there's 10 out of those 25. That's the ensuing data you're going to see in terms of the averaging of ADR, which is average daily rate, and occupancy. So we looked at 25, but 10 report. 5 of those were in the city of Solvang out of your 13 hotels. Next slide. 5 of those were in Buellton out of their 6 hotels. And then the rest, sort of on an independent basis, San Ynez, et cetera, didn't report into these metrics. Next slide, please. So this data that you see on slide 28 is from the green reporting hotels. Having said that, we think it's a decent representation of your hotel market. Because if you look at the hotels that report, it makes sense. And so you then historically are finding that ADR has been growing to the tune of 13.5%, which has reached a level of about $150 ADR, generally speaking. Your occupancy has been growing at about 3.4% over the last 5 years, to about 73%. Next slide. Sorry. And then you'll just find here that you can clearly tell peak occupancy levels are June, July, August in the 80% plus range. And clearly you have a weekend visitor that come to occupy your hotels, those hotels at an 80% ratio or better on Fridays and Saturday nights. Next slide, please. So 1,732 rooms total in that data set. You have over 700. That ratio is about 42%. So what we did on the next slide, please, and we looked at different scenarios. The top chart is assuming a 2% growth. The bottom chart is assuming a 3% growth. We wanted to give you a couple scenarios because I don't want to be overly aggressive and assume 3% on growth of demand for hotel rooms, but I also wanted to take a look at 3% and 2% to give you a sense of a range. The conclusion is, if you look at this column here, that's all of the hotel demand that we are projecting. The column to the right of that is 42%. It's a ratio, it's a factor. Right, wrong, or indifferent. That's how we viewed that in the demand in that 5-mile radius, you can capture 42%. You could capture more. You could capture less. But from that basis, there's 56 rooms that could potentially be in demand based on all those variables in the next sort of 5 years, which by the way is a blink of an eye, to 96 rooms. So let's just call it, if I'm going to round, 50 to 100 rooms, which is one hotel generally speaking. Beyond that, if you look at beyond 5 years, maybe 10, 15 years, there's 138 to 380 rooms. There's a pretty strong argument there that that's 2 or 3 hotels, easily. All of this wants to point to, next slide please, you know, what does this is just a summary and some notes, next slide. Keep going please, keep going. You know, what does it mean for this opportunity site? It's like I've got to take that data and point back to what it means for that opportunity site. So our conclusion on hotel demand is there is demand. And I'll keep talking about that to a degree. In this section, we looked at retail and multifamily in terms of market data. Next slide, please.
Can I ask you a quick question?
Yes.
When you did your analysis of the hotel demand for hotel rooms, did you see what part of the range did you see greatest demand? For example, those with a price ADR of $200 or more, or those with $100 or less?
Yeah. That is sort of at 73% occupancy and $150 ADR, you're going to be harder pressed, right, to say, I'm going to create $300 a room nights. Does that really mean, is there demand at 50 to 100 or even 200 rooms for that kind of a rate, which is differentiated by the average that we found at 150? But that also depends on when the last hotel has been built, when the last hotel has been remodeled and invested, and what are the other options that people have in the marketplace. So it's an art and science answer to your question. I don't think you can build 100 rooms necessarily at $300 a night ADR. ADR is average daily rate. That means that you got hotel rooms that are renting for $500 a night and $150 to $200 a night. So this is average. And if you look at the peak times, you will get $300 to $500 a room nights in your summer months. But it's really, again, averaging out throughout the year what happens in the January, Februarys, and Marches of the world.
I bring this up only because anecdotally in my conversations with hoteliers, those who are able to command or have a higher pricing power range were able to have a higher occupancy rate, and they seem to essentially be selling out their rooms for the entire year, or at least on an increasing basis.
Yeah.
I don't want to talk specifically about, which I'll tell you afterward. I don't know if it's public.
I mean, I don't know who's renting out hotels on it.
But what it suggests is that the demand really is there for more boutique, higher end hotels.
Right.
I'd like to see more study on that.
Yeah. So, and I think we'll talk a little bit about what next steps mean. Next steps can mean and should mean in an implementation phase of all this data, we have to figure out, we have to truth test that, and we have to go to the market and have those conversations. And that's a good next step for you all based on the demand. The first thing, when we were working on many hotel deals for many cities, the first thing, and I have good relationships with the big hotel guys, the first thing they say is, I need you to do a market study. They got to see data like this. And sometimes it's most of the time drill down even more specific than this. And it will address some of those things, even as to sizes of rooms and, amenities and things like that, and maybe even architecture, that kind of thing. So we'll drill down, but what this tells us is that, in my opinion, our estimation, there's a real opportunity for hotel demand. And then vetting that, I think, is a next step, practically. And keep in mind, there's 1,732 hotel rooms in a 5-mile radius. So, the glass is pretty full. So we need to kind of vet the opportunity, and we're seeing it. I'd rather be conservative, frankly, in sort of the evaluation to say, okay, what's the demand, and go to the market. But I think there's something to go to the market with. By the way, if these numbers were different, and we've seen it before, it's 0 for the next 10 years, I wouldn't be having this conversation with you. I would just say I don't see it. I don't see the demand. Vacancy for retail at 2.5% is solid. It's a very strong number. If you compare it to the sub-market in which you're located, which is central Santa Barbara County, it's 4.3%. And if you look at downtown Santa Barbara, which we recently did a study on at 10%, that's a big problem. And it's a big problem for them, and that's a separate issue and a separate matter, but 2.5% is a pretty stable retail vacancy. Next slide.
Is the downtown Santa Barbara one affected by the homeless situation on State Street?
When you say affected, it might be affected, but the trend of consumption that I talked about earlier
Is more macro. Okay.
in my opinion, because I was in the middle of that discussion with 7 council members. But I don't point to the homeless as being the cause of that. The interviews we did in Santa Barbara, which was totaled 200 constituents and stakeholders, I'll exaggerate, okay? They blame the city. They say this is a tough place to do business. It's impossible to do business. Lots of editorial comments. I don't walk in and say it's the city's fault. I mean, frankly, I'd say it's this trend of consumption. But 10 blocks of traditional storefront retail is not sustainable. And that's what they're facing. So until they make some important decisions and policy decisions to change that and to blend uses, we did an analysis, not the same as this, but the conclusion there was if you don't bring residential to fill in the gaps, the problem's going to get worse. What we found, just to answer your question, in my opinion, where there were more vacancies, it was more opportunity for homeless folks. And we witnessed that. We saw that they were there because there's not activity there. Then the compounding effect is when a landlord tries to lease their space, because it's vacant and there's more homeless folks that are there, it's impossible to lease it because that's not pleasant to the eye. So so they have some issues. When you look at your 2.5%, do you want to be Santa Barbara State Street, which has been iconic and a destination for years and years and years, or have some stability and some sustainability? So they can fix their problem. It's just going to take a lot of political will. Next slide, please. Summary, keep going. Historically, this is the central Santa Barbara County market, and you can see kind of the trend of vacancies. Many of these trends in these graphs on the bottom are basically consistent with, you can point to a recession in 2008. In around 2017, you can point to what we're facing right now, which is the need for retail reimagination, which is what I call it. And so you'll see generally these trends mirror those things. Next slide. So in your city, there it is, 2008, you end up having a eventual rise in vacancy rates. It comes back as the economy gets healthy. You get to 2017, which is kind of where we're at right now in the last 3 years. Vacancies are creeping up. And I've told you guys before, Santa Barbara, St. Helena, we're working for City of Sausalito. I did some work down in Santa Monica. I mean, these communities that are iconic destinations and locations are all facing the rise of vacancies as a function of this change in consumption and behavior. Next slide, keep going. So on the multifamily side, again, a very stable, 2.4% vacancy factor. Next slide. $1,400 average asking rents. Next slide, please. Summary, keep going, please. And then historically, what you'll see with multifamily in this Lompoc, San Ynez submarket is a real trend for vacancy decline. So, and the real trend for rents to increase. And the next slide, and this is your city. Again, same thing. Vacancy decline, rents increasing. And this is an example of many of the communities that we're looking at where you've got basically rising rents and rising residential values because we have a shortage of supply. Next slide. I summarize all that. Next slide, please. Keep going. Keep going. From a retail perspective, you have about $130 million of taxable sales. Next slide. Which is $22,600 per capita. So the more relative comparison, when you look like you're real small in the last chart, you are in a pretty decent shape because you've only got 5,000 or so people. So when you normalize your per capita retail sales, you're above Santa Barbara County, for that matter, which has got 450,000 people. So at 22,006, again, that's a sign of some health in your retail market, stability. Next slide.
Wait, is Buellton because of gas and cars?
Yes.
Thank you.
It's a big part of their revenues.
I don't think your microphone's on.
It wasn't.
Next
Thank
slide,
you.
please. Keep going. This is a seeing eye chart. You can study it, and you'll have some questions for me later, but I'll be happy to answer them. I just don't want to spend a lot of time on the seeing eye chart. I understand everything. It's in there, but go ahead. Next slide. Keep going. Okay. So what I call the cash registers versus the wallets. The cash registers, which is $22,600. That's your retail sales tax. It's ringing every day at your cash registers divided by your per capita. The wallets of your citizens are spending $19,700. So that means you're capturing dollars. Overall, from a retail perspective, you're capturing dollars from the outside. So, you are dependent, your local citizens are spending money in your town, but you're also capturing from the outside universe, and that's a big part of the visitor component. Next slide, please. And then, this is important. The column that says retail surplus and leakage, I might have shared some of this with you in the past, but that column's got red numbers in it and black numbers in it. The red numbers by category are the dollars that are theoretically leaking out of your city. Well, general merchandise has categorically 0 cash registers ringing in your city because that's not the type of business that you have by way of NAICS code. But 27 million bucks of grocery dollars you're capturing beyond your demand. $8 million of restaurant sales you're capturing beyond your demand. $10 million of clothing sales you're capturing beyond the demand, et cetera. So, this kind of tells you there's an up and down. Net, you're net positive when it comes to these things from a retail perspective. There are a lot of cities that we evaluate. All those numbers are red. And 5-10 years ago, I would say build stores to capture those dollars because they're going to another city. Today, I can't build a store because they're going here. And so when they're leaking to the internet, you've got commodities and retail, traditional retail goods and traditional retail formats that are now below the ultimate square footage in comparison in our country to service establishments. What are service establishments? Restaurants, entertainment, fitness. So that's today's retail. And frankly, hospitality to me is very germane in that categorization. Next slide. Keep going, please. Keep going. Okay, keep going. I think someone before had asked me about trends. Clearly, your commodities and clothing trends, by the way, historically, are on the decline. Even though you're capturing dollars, they're on the decline. And clearly, your restaurant and service establishments are on the incline. They're increasing in terms of the last. We tried to look at a trend of 5 to 10 years. The data didn't line up, but that trend is happening in your city, and it's happening in most cities.
Were you able to differentiate between the type of restaurant, for example, quick service or sit down, that kind of thing?
The categorization of this, there can be a drilling down of sort of more of a void analysis of what you have. You could have quick, and definitionally, we can look at quick serve versus sit down, but this data doesn't tell us the differentiation. It's just drinking and eating establishments.
Zena, would we get that from Muni Services?
We do have data from e-services by business on monthly basis, so we could get some data by, ourselves classifying different establishments into the categories.
Yeah. Next slide, please. Keep going. Okay. So, sorry, I think I should have had a map of this earlier in this presentation, but you all know the site, you all know your property. This is kind of what we looked at, and it was just take a look at these parcels and give a SWOT analysis on, is there a development or redevelopment opportunity on all or portion of it? So on that basis, the city, the number 1 is a hotel operator, 2 and 3 are privately held, 4 and 5 are controlled by the city. 6 is controlled by the county. 7 is controlled by a private owner, which is the old lumber site. 8 is also controlled by that owner. 9 is a private owner. Next slide, which is a home. It's a
Business.
Converted to a business.
Excuse me.
Construction.
So if you go back to that slide,
Yes.
unfortunately, you have placed the square that says Solvang Library Veterans Memorial Hall right where there might be some boundaries that I am unable to look at.
Yeah, it's interesting. The parcel map shows this jog.
Right, but I can't see that because you put that white sign there.
That's the jog.
Yeah, but I can't see that.
So it's in your report.
I know, but it doesn't show in my report because it's got that white sign that says Solvang Library Veterans Memorial Hall there. So do you have another map?
In a future report, that can be taken away, but
Yeah,
I think that Ken just very clearly pointed out the boundary. Can we move on?
I can move it, no problem. But just what it is, it's an odd little square that does come into, which I'm still maybe trying to understand. But it shows to us that there's control of the Veterans Hall building, that the city has control of that. And if I'm wrong, please correct me, so I'm, you know.
Okay. Well, I think we needed to look a little more into that
Yeah.
because there could be portions of that Veterans Hall building that we don't have control over.
As in the court?
No.
So I have looked at that along with Matt Vanderlinden, who gave me, I think, a slightly better version of this without the big white square. And
Sorry about
the
Need us a bigger
entire,
square.
I'm getting killed over the big white square. I'll move it.
at least according to that, the entire Veterans Hall is city-owned. If you think about where the buildings are over there, the entire library portion is county-owned.
Yep.
And then that hallway where the courtrooms used to be on the west side of that hallway, the courtrooms, and the entire area going back that's used by the sheriff's office now is all county-owned.
Right. And, Mr. City Attorney, the senior center in the back is county-owned.
That's correct. And my understanding, actually, it's both the Veterans Hall and the bathrooms that are there toward the back of the Veterans Hall
Right.
are city.
City or county?
My understanding from the one that Matt and I looked at, that area was, I believe that was city.
That's the Legion wing you're talking about.
The Legion Wing or the senior center? I mentioned the senior
I'm
center.
actually not talking about either thing. I'm talking about there are some bathrooms that are immediately behind and to the west of. Yeah, they're like behind the library, and they're in that little courtyardy
Yep.
area.
Yeah.
But then everything to the both south, west, and north of those bathrooms is county.
So I wanted to better understand that in terms of ownership, and the Legion, which is post 160, and then the Veterans for Foreign Wars, which is another 7136, pardon me if I'm wrong with that, and I have square footages for that. So I just was walking it again, and I wanted to make sure I understood. And I can't see on a map, where the lines are. It's interesting how the parcelization of it shows that it's takes over portions of the building, again, in the city control, and then these other uses that are in county control, library, court, police, and senior center. That's what I've come to understand are under the county control. And so let's keep going, because that's an important part of the discussion. And so we've outlined those in terms of zoning, parcel size, ownership, and zoning. So what's interesting is if you go back, Zena, 7 and 8 are in DR20 zone. 9 is in TRC. And then 4, 5, and 6, if you go back down, Zena, are institutional. Right? 4, 5, and 6 are institutional. And then, of course, the corner 1, 2, and 3 are back to TRC. So it's an interesting zoning pattern as well. I mean,
It's like an island TRC.
yeah. So we were asked to, evaluate the
Berlin,
opportunity
West
site.
Berlin.
So I'm coming to you all. If you go to the next slide, I can get to my SWOT analysis, and it's okay. Well, what's the opportunity? That's what we were asked to do. So I'll go through this. The strengths of this overall site. Right? You've got great frontage on 246. You obviously have a great visitor population. These are global strengths, if you will. You have this amenity called the wine industry, which nobody will take it away from you. It's going to continue to grow and be strong to bring people to the region, if you will. And then your cultural significance. Some of the weaknesses are you have all these parcels. If one said, is this one site? The answer is no, because you've got multiple parcels. So, and you have public and private ownerships. You have county ownership, you have city ownership, you have a sheriff that's there, you have functioning, operating uses of Veterans Hall, which were, as I understand, federally funded, 2 different posts, the Legion and the VFW. And you have a senior center in the back. So you have operating, functional uses, and everybody's got competing interests. So a master developer is going to clearly need, if there's a master developer out there, is going to clearly need to consider trying to assemble all these parcels if there's a development to be had. There's a certain feasibility and infeasibility to that. And multiple zoning designations to boot. So other than that, it's a perfect site. I'm being facetious. But the opportunities are, as I mentioned before, based on demand analysis, which is what we're trying to sort of conclude, is there is an opportunity for a hotel. I call it an upscale hotel because I believe that the market is there, kind of to answer Councilman's question. There is, I'll call it upscale. There is a hotel opportunity there based on those rooms and that evaluation we did. And then to blend that to a degree with the residential that we find is in demand. Now, is there a retail opportunity? You're already attracting a lot of restaurants, a lot of grocery stores, a bunch of other stuff is going on the internet. Your destination in your core downtown and the walkability of that core downtown, that's healthy retail. So I think it's a little bit of a question of, is there a lot of retail? What size is the retail anyways? It wants to be experiential. I think that hospitality, frankly, can almost satisfy the interest of customers to come to your city. I mean, even the Lansby Hotel, which we've had some meetings in, frankly, it's a very cool space, right? It's someplace that you can go and spend time and hang out. It's experiential, if you will. So I think the opportunity for an upscale hotel and the blend of the uses, frankly, is with residential, based on market demand. Other opportunities, again, are continue to leverage your experiential restaurants, agricultural amenity, leverage the destination from a cultural perspective, and what are the threats? Threats are, your political will to promote new development. Frankly, that's a threat in many cities, but I'll be in Sausalito next month, and you guys got to wish me luck, because, there's a sensitivity to development, period. Your community has to, the things we talk about today is education, engagement, and entitlement. And those are the things that I believe cities need to kind of adopt and embrace. So, and the macro conditions, are we teetering on a softening in our economy? You saw the graphs, it's an up and down business. I thought we were, and now I'm not sure if we are. This year will be a very telling year, and then where it goes toward the end of the year will dictate a little bit of whether there's a teeter in our overall economy. But if there's a teeter, those occupancy rates are going to go down. And if there's a teeter, the available financing is going to go down. So that's what happens when you hit soft patches in the general economy, for the most part, if you're trying to create some predictability out of the economy. So next slide, please. Here's some of the trends. We were kind of talking about the sustainability and older population, shared economy, the blend of uses, which we believe are very important. Next slide. Economic development tools. We did a development opportunity reserve, which is a density strategy for the city of Buellton, frankly, opportunity zones. Land use. I think land use and zoning is going to be one of your tools, if you will. And then a public-private transaction. At the end of the day, you need the private sector to continue to invest if you want projects to move forward. And that's your decision, not mine. But it's going to take private sector investment. And so, embracing the public-private partnership structure is going to be very important at the end of the day. Next slide, please. So citywide overview, I'll read these. Strong, cultural regional destination with solid demographics. Those recent festivals that I mentioned are all part of, I think, your success story, and it's a story to be told. Last year my big theme was all about storytelling, and I didn't mean just for retailers, I meant for cities too. So there's a story to be told about Solvang, and you're going down that path. Maybe that needs to be fine-tuned, and maybe there needs to be a better elevator pitch or a different elevator pitch. I don't know, but to leverage your strengths from a cultural perspective and what these festivals are doing for the draw and the attention that you're getting feels to me like a success story. And then, of course, I just created a link to the CBS drone show. There are opportunities for hospitality, residential, and maybe some retail or experiential uses. You can pursue some of these economic development strategies to inform a visioning, a zoning, an entitlement process, and a general plan update, ultimately, because I think ultimately you guys need one. And then challenges in the short term is this daytime, during the week, lack of, vitality and prosperity per se. Parking, I've heard it from you all that parking, you can't get from one end of the town to the other, without pulling your hair out. Only took me 10 hours to drive home last time, but that was a whole different story. So I was pulling my hair out then. Getting across your town was actually easy. And then, 246 and Mission, in terms of, that or 246 and Mission and the parking congestion on it. And then lastly, the potential for infrastructure. What is the evaluation of that opportunity site? And maybe it's just the old mill site, which is 2.2 acres. If that were to be one step in the phasing of those overall 9 parcels, that was 8 acres, if that was one step in that process to pursue, we still need to make sure that we understand what the infrastructure is going to take in order to pursue that as a first phase of a development, and that's just a thought. You also own a lot of property in your city. So I think those need to be evaluated and potentially leveraged. As opportunity sites. So here's a citywide map we spent a little bit of time looking at. Next slide. Your zoning map, which we saw some of the zoning in terms of TRC versus DR20 versus institutional and the opportunity site. Next slide. And then some next steps. So here's what I kind of see as a potential set of next steps, and we have a draft work plan accordingly, but you all are going to absorb this and then give any direction that you feel is fit. But outreach and meetings with property owners, which includes an understanding of everybody has some different motivation. What's the county's motivation? What's the private property owner's motivation? And I've had preliminary discussions at your direction, but it's what are they really motivated by? To me, that's part of an implementation phase of this assignment, and that is there an opportunity to really work with the private sector or those property owners on a development or redevelopment that makes sense for your community? You could consider negotiating and consolidating and acquiring, you all as a city, acquiring some of the non-city owned parcels. You own a lot of property in your city. You could consider buying some of those. It could be a public-public deal to the extent that those are publicly owned. Look at zoning to match the vision. If TRC is a big part of what your goals are in terms of, hey, I want to get a new hotel deal because there's demand for it, do we need TRC zoning in order to effectuate that, yes or no? So that's a consideration. And then target this hotel blended use opportunity through a developer selection process. What does that mean? You can go out to the universe and find a developer who's qualified. You could look, and that person could be right in your own backyard. So we're doing it for a city right now. They own a piece of property. We put out an RFQP. The folks who are answering the phone to that RFQP to buy and develop that parking lot, and it's a city in LA County, are right next door. Mm-hmm. Public, transparent process. And I don't know what the outcome is going to be because the RFQ responses are due next week. He's right next door. He may be the best candidate. We don't know. So
did you look at expanding the TRC zone?
Yeah, I mean that's what bullet point number 3 really is.
Okay.
Is to talk about if that RD20 is something that you want to change. Now, I read something in the zoning, and I probably need better education on it, in the zoning element or the zoning code that said what's germane to commercial and visitors are 2 zones. One is TRC and the other is RD20. I didn't understand that. So it's really a question on my part, because as I look at the zoning of that site area, it's RD20 right next to TRC. Does that mean, and then it says you can do a mix of uses, you call it, with residential and commercial. So I think that's a question on my part to explore, and frankly, that's kind of why that's up there, is to talk about zoning. On a citywide basis, it's take a little closer look at your own assets, how those can be, what are you doing with those assets? Maybe you already have the answer to that question, but one thought on my part is take a closer look at those. And then zoning evaluation for other land uses within the city, again, on a citywide basis and businesses, to really take advantage of this outdoor, walkable, restaurant, seating, dining environment. parking evaluation. I know you're doing a study on it already, but I think the outcome of that parking study will be very important to some of these opportunity site areas, because it'll tell us what's the total parking, what's the demand, and I think I gave some input on where are those parking nodes located, and are they in the right places or wrong places, or do we need to get people to park once and then walk for the rest of their experience? And then visitor evaluation for midweek, and I put conference center in there, but the infeasibility of the conference center for me, I understood that because I think it's a very expensive proposition. I think that concludes my presentation, and obviously this is your report, so there's a lot more in here than that. So
Thank you. Are there any questions of the staff report or the presentation? No?
Mr. Mayor, may I ask a question?
Yes.
On the projection of supportable new rooms, because I just did some real quick back of the napkin
Yep.
map on things that are either didn't make your room count
Yeah.
or are, I'm going to call them somehow in the pipeline, either under construction or approved or likely to be coming in the next few months.
Right.
If the number of rooms were already 150 higher than what you're showing,
Right.
what would you guess impact that would have, since that's more than what you're saying the
Yeah.
city can?
Yeah. On the short term, the argument would be, and it's a great point because we see it all the time. We look at data and metrics, and then in the pipeline, something either hadn't quite been submitted or tomorrow it gets submitted. I don't know that, right? However, if that's 150 rooms, let's just say, whatever it is, and it theoretically absorbs that short-term demand, I mean, that gets you to 1,900 rooms in this 5-mile radius. So again, I think the vetting of that is, on a practical basis, is conversations, outreach, pursuit with the hotel market and hotel industry. I know I'm working on I'm working on a site with 2 hotels in the Central Coast on one site. And I'm just telling you anecdotally, there's a developer that says, I want to do more, and they know your market. So they know more than I do. So I think part of this exercise is to get into the marketplace, frankly. And we did
At the
an
same time.
analysis like this for that site, and then we did an RFQ. They said, no, I mean, we see that there's demand. What we don't also know is what hotels want to expand that don't feel like they're in the market to capture market share. The risk is the overall ADR goes down, but they believe that they want to be in the market, whether that's a Marriott or a IHG or a Hilton or, whatever the big brands are. They're very aggressive today in terms of their expansion plans. And of course, there's the boutique hotels that can serve, that are great within your market already, for that matter.
Well, it's the boutique hotels that are actually expanding, and they're able to drive higher pricing power. So
Right.
it suggests, I'm taking away from your report that your statistics are basically showing that it supports more development, but you can't say yet in which direction.
Right.
Or what level.
Yeah.
High, medium, or low.
Can you see, and also just back to the point, both those points, we took a 42% ratio. If you look at those numbers and you say, well, I'm capturing all the demand in that 5-mile radius, and Buellton isn't, or Los Olivos isn't, or you know what I mean? Then there's a lot more demand than 150 rooms. Now, I know there's already a hotel site on the market, and you all do too. It's sitting in Buellton, right on McMurray. Right? It's being marketed as we speak. I get the emails on it all the time. I don't know what's going to happen with that site, and I don't know whether that's in your pipeline or not. Potentially not. So we don't know.
Yeah, no, my 150 rooms are entirely within the city
Within
of
the city.
Solvang.
Right. So there's much greater demand outside within just a 5-mile radius. So that there's a real dynamic there, that it's not just easy to say it's A plus B equals C.
Mr. Mayor, may I ask if you could maybe talk a little bit more on what you talked about being blended use, and the council has talked about in various ways relooking at development potential within the central core TRC area.
Yeah.
Right now, the TRC zone allows for residential, but you actually have to, it's a 1980s mixed use type zone, so you have to have 51% commercial.
Yeah.
There's been talk about perhaps, having more 3-story buildings, which if the residential were the second and third floors, you suddenly cannot meet the 51% requirement for commercial. Is that?
Yeah. So it's a great question, and let me be more opinionated. Having a 51% or any percent requirement, I think, is challenging, whether it's an old zoning ordinance or even a new one, because I believe that this concept of mixed use, which you see it all over the state and the country, is I believe there was sort of this forced, you got to have retail on the ground floor. I see a lot of vacant retail on ground floors of buildings. So at the end of the day, the short answer is it's got to be market driven, in my opinion. It's got to be market driven. And then demand will sort of dictate that. It has to match a vision and a zoning of the city. So that's some of the disconnect, I think, and the connection that I think you all can do when you start looking at potentially new zoning. That's one example of a blend of uses, right? Is that there's a real reason to have some ground floor retail when there's demand for it that amenitizes maybe the units above, not just the units above. It has to stand alone. I love it when someone says, well, if you put retail on the bottom, it's got built-in customers. There's 50 of them. They need 2,000 of them, right? So you still needs to be a sustainable concept. And the other thing is, I think the blend of uses is spaces are starting to look and feel a lot alike. That's where I come up with that term, because I have a different fun presentation I do on retail trends, and I show 4 living rooms. One's a hotel lobby, one's a residential lobby, one is WeWorks, and one is a retail environment. And they all look like a living room. And nobody can distinguish between which one is which, because we're trying to appeal to a customer. The apartment and residential and multifamily folks, they're taking a page out of the hospitality book. They want concierge as a result in their culture. They're creating fitness so that you don't maybe go off and work out someplace else. They're creating mini WeWork environments within their multifamily units. So that's a function of blending of uses, as well as, power centers were built separately, office parks were built separately, subdivisions were built separately. That's all coming together and it's integrating. So the real term is integration. And I think a lot of that has to do with the consumer as well. They want integration in land uses. So that to me is an overarching theme if you're going to look at land use, general plan or otherwise. So that's where I come up with the term blended use.
Okay, well, I just from sitting here listening to the rest of this and reviewing, maybe it's premature to ask because I think you're going to go out and do a little more research on this, but for example, we have our senior center that is in section 6.
Yeah.
And they have already, put in thousands of dollars into planning and plans for building a building.
Mm-hmm.
So I would assume, and I don't want to assume, but I'm hoping that there would be involvement with them in this overall plan that you've
Right.
got. We've got a couple other problems going on here. The actual veterans building.
Mm-hmm.
Now, we had substantial, now I don't want to say difficulties, but had to go into using specific guidelines and just redoing the windows and bathrooms because it has a specific special designation as a building, and it was apparently purchased with federal funds. I could be wrong about that, but it does serve our veterans.
Right.
The other problem that we've got going here is that on 1783 Mission and 1793 Mission properties, sections 7 and 8 are zone DR20, and there were original plans for residential use that were not complete. So that was backed out, and now this particular developer, I guess, would be interested in putting in possibly a hotel. I don't know. I'm not engaged with this. But I do know that any type of a zoning change for those parcels would take, having a quorum up here to be able to vote on that, and I'm not sure that all of our members on this dais would be able to do that. So that's another discussion to be involved in. But I mean, overall, I mean, that would be great to get more use out of this area. I don't know if this council is going to be the one that's going to be able to let that happen with any changes, but, yeah.
I mean, the things you point out, again, multiple property owners with multiple sort of motivations, I'll just call it, whatever those motivations are, and then the different layers of zoning. I mean, those things aren't insurmountable in terms of trying to come up with a development plan that you all think makes sense, but there are steps in that process, clearly, that need to be on the table and addressed. That's the reason why we
Oh, yeah, and the county has to be on board with this also.
Well, you have a
so.
county, you have a sheriff, you have your senior center that's being operated there. So yeah, there's multiple uses, as I said, that are operating going concerns. So that's part of the discussion.
And I think this provides a great opportunity to allow those discussions to happen. From my understanding, I think the sheriff's facilities are, inadequate to their needs today. There's the senior center that's over there, and they've been trying to get that project off the ground for quite some time. Maybe this helps get, those things done for the betterment of the community. So I think there's actual, from an opportunistic standpoint, I think there's a lot of opportunity here for all the parties involved. The library doesn't need an upgrade. Ways to find getting all that done for the community are all very positive things that can happen through these conversations.
I would say if I didn't say it before, I should have, but when I think about this blending of uses, if I didn't say it on the one little, we have like a little martini glass on there, civic, office, residential, retail. I mean, we'll see and find where all of those uses, and they don't have to be stacked on top of each other. They can be horizontal sort of blended use.
I'm trying to figure out where you would put the housing.
I might put it along Maple, which with housing right across the street. I was just driving
In the
this.
event that there was a change in zoning.
Yeah.
Or if that was possible.
Yeah. The 246 in Mission is a pretty strong commercial face, if you will. And I mean, you also have some great, the site itself has some great outdoor, outside amenities, right? It already has this open space type. You can leverage that as well. I mean, again, there's a creative solution to some of that stuff, depending on what the vision shapes to be. I think some of the next steps are having those conversations.
Definitely.
Yeah.
Are there any questions of Cosmont? Okay, with that, we'll go to public comment. I have no speaker slips on this item. Is there anyone that'd like to speak on this item? Seeing none, I'll take this back to the council for discussion and action. Who would like to start?
I can start.
Robert?
And just observations, I think that there's the what's the word I'm looking for? There's the nerve, if you will, amongst the town to do something with that facility. It's been talked about by a lot of people, and I think that's something that needs to be really, really, really explored. And it was Aaron Peterson that brought this up originally, was to possibly do a public-private thing with that, and get your Cal Poly involved, get your University of Copenhagen involved, get your Carlsberg beer involved, and really make that a showcase. And just a couple of off or not in any order notes, but I personally think that millennials going forward don't appreciate Solvang for what Solvang is. I think the older generation appreciates the tradition of Solvang more than a younger generation. And I think the hotels are heading that way, geared towards that demographic. I don't think retail at all is geared towards the millennials. Just an observation. And the comment on the experiential retail, I think, is a great idea. I'd like to see more of that in the TRC. Did you bow your head when I said something? Oh, Okay. Those are just my notes, my thoughts.
Okay. I think a lot of what I was hearing about was experiential type tourism, which is really what is unique about Solvang. We have a very boutique, special feeling here in ambiance, and it's about preserving that, and that's what people come here to it's one of the reasons, or drivers for people visiting here. And yeah, you look at all the new things happening in Solvang today, just even the way the hotels remodel and the restaurants that are going in, a lot is looking for experiential type items. So I think there's a lot of potential here. We just got to start the conversations and come up with some kind of strategy of how you would ultimately, if you were to look at this as a opportunity site, slowly move in the direction of that vision.
All right, I'll continue then. I think we need to, as a council and as a community, develop a stronger vision with respect to Solvang. We started this conversation back, I think, in June. We need to think in terms of a master plan, what parts of Solvang might develop first. For example, we were talking about this property over at the Vets Hall. Maybe that's the first place to start. Ideas related to hotels with respect to near the Theater Fest. We were calling that the Theater District, for example, or a walking promenade. All these things have to fit together. And there's no question it's not going to happen all at once. It's going to be phased in or transitioned. And all this goes back to a couple of things. One is market demand, which is what Cosmont tried to bring to us today. I think he just scratched the surface and actually created more questions for us to address. I think it's going to take some more study, in other words. Secondly, I think it's going to take a lot of work on our part as political leaders to develop the political will within the community, because unfortunately, in any community, there's always going to be 20% who doesn't want any change whatsoever, and that's unfortunately not, I don't think we can stay where we are. I think we have to move forward and start planning for the future. For example, there was a point that he made about going in and replacing the infrastructure. This is something that the developers had told us. There are people with tens of millions of dollars who would love to invest in Solvang. They see the future, the potential that he was hinting at, but they're not coming in until we make the investments in the sewer and the water and the traffic and the parking. So this is part of what Xenia's doing, and I really appreciate the concurrent efforts that are being made. This is a really big subject. The question is, how do we fit this into an appropriate vision that we can all get behind, that we can then sell to the community and help them understand this is what the majority of the people are willing to get behind, get the buy-in from the majority of the community.
And where do you start?
Start with the vision.
The vision, yeah.
And then, of
Okay.
course, this is informed by our brand, which is what we talked about last meeting. The brand is so important because it's one thing to say we are the Danish capital of America, but what does that really mean? Are we going to continue to look like, there's a place called Gamlebu,
You brought it up at the last meeting.
right? Or are we going to start thinking in terms of districts where one part of town looks more, I don't want to say modern, but certainly different, right?
Fantasyland and Tomorrowland.
I want Star Wars, a Danish-themed Star Wars. No, but you get the idea. The idea is that maybe, I was talking to one of the hoteliers in town, a very successful group that sees a lot of potential, wants to invest millions, and they're looking at working with the city on a public-private partnership basis to develop a much bigger version of what they already have here in town. And it would serve the theater district. In other words, it would expand the emphasis on what we'll call the theater district. Beautiful idea. He's willing to come in, put his own money in, but he needs us to work with him and make sure the planning department is going to support that and not get in the way of that, because they're not going to sit around for a year or 2 or 3 while our planning department figures out how to support that. So again, I can't emphasize enough how important a vision is from this council's standpoint, and a vision that the community can get behind with respect to the brand that we still need to define.
And developers.
The developers will follow.
Well, I think that we are in agreement on the vision, and that something should be done with that area. I just think that there are a number of kind of serious obstacles to overcome before we can move on that. And let's not forget that Solvang also has, the Spanish history. So it's not all Danish. It's got a lot of Spanish history. So it doesn't necessarily have to look like, Solvang Danish coming into town there. It can still, maintain the Spanish architecture, kind of like, the Mission and the original designs that were going to happen at 1783 and 1793 Mission Drive.
Yeah, that was supposed to blend in. The original drawings were supposed to blend in with the Mission and the Mission architecture. That's right.
Well, that's what I mean with respect to brand, because how do you have these two very different architectural styles going at the same time? Originally, before the town decided to go Danish, as we call it, it was basically reflective of the Mission itself. And you can go back to the Elverhoy Museum, you see the old buildings, and they look like the Mission, because that's what they wanted to match. It wasn't until the 50s that we started moving in the direction of a Danish theme. So again, this goes back to developing the vision and getting the buy-in from the community. What direction do we want to go?
Just a question, the zoning, how did we end up with a little island TRC parcel?
Mr. Mayor,
I
as you
actually
know,
have a
I
member of
was
the
not.
public that's willing to answer that really quick. I'll allow that.
I wasn't here when you did your housing element update in 2015. As I understand, the rezoning of what's known as the lumberyard property occurred as part of your housing element update in 2015. I'm going to make a wild guess that that there must have been some belief idea that rezoning the lumberyard property to DR20 was going to accomplish something in particular that somebody wanted to accomplish. It did give you theoretically 40-ish unit counts to add to your hypothetical report that you did in your housing element update.
Right.
So I don't know why.
With that, I'll let Ed comment on this.
Why
and
it
see.
didn't go all the way to the corner, I don't know, and other
Right.
things. And I don't mean to.
I can't answer that question for you. In that time frame when it was redesignated DR20, the state housing authority was looking to have the potential for enough housing in the various cities in the state of California. And to get that requirement for the city of Solvang, the planning director at that time went through and looked at pieces of property that were being underutilized. If you take a look, there is some DR20 down on Alamo Pintado on either side, a couple other pieces of another piece of DR20 on Alisal behind Denmarket Square. And these properties were designated to be DR20 to give the opportunity for the housing to be developed. The reason one little piece of property on the corner of Pine and Mission Drive was it was a small parcel. It was not being considered as being underutilized. The two pieces, the 1793, and I always call it 1781, or you call it 1783, the city at that time considered those particular parcels as being underutilized. And at the same time, the parcel that is now the lower income senior housing up on 1765 or 1780 Maple Street was also designated a DR20 piece of property, and that property was about 1.3 acres. Since it was being utilized for a needs group of individuals, i.e. low-income seniors, that property ended up originally it should have had about 26 units on the piece of property. due to, or what the needs, they were able to get an upgrade to, I think, 41 or 42 units. But the reason the lumberyard property and my grandfather's house was that they considered it underutilized. And they city wanted to know if we would change were interested in changing the zoning from TRC to whatever it was, and we really didn't care at the time with my father. We were looking at TRC, was taking a look at it. The distance between that piece of property and the tourist-related area was too far to maintain as a TRC, so it went back to, and at one time, we also contemplated putting some type of residential units on there before we did sell the property to the current owners. Hopefully that explained how you ended up with the one little TRC piece at the end. It was being utilized as a piece of property and it's so small it couldn't be utilized for anything else.
Right.
Thank you.
I was just interested in the history because, obviously with RENA numbers and things, we have to make sure whatever we do that, things still work out in several different elements, such as the housing element.
Mr. Mayor, members of the council, one of the things that you may want to think about and that we could bring a suggestion back to you on is a less 1980s approach there, consistent with what I think Cosmont said, and maybe look at the things that you can do under your TRC zone. That property, at least what I'm hearing, is one of the challenges. Your DR20 doesn't allow for blended use. Your TRC doesn't really allow for blended use. With some relatively minor changes to your TRC zone, you could allow for such blended uses, which then might result in more housing opportunities throughout the TRC zone area. In that case, if you were not reducing the opportunity for housing, it would be relatively simple to return that parcel back to what would then be a new TRC designation, and would have, again, that opportunity for an overall development of that area. And again, blended use that I think is, based on listening to you all for the last 7-ish months, more in line with your vision for the city.
Right. I would just say that I like that idea because I think one of the obstacles we have here is in that overall vision for that area over there, thinking 10 plus years out. How are you going to accomplish that? How are you going to pay for it? We've identified public-private partnerships and other forms of strategies, but one of them is, for example, if a hotel were there, that's one of the elements that you kind of need for that site. But if you took, even at a very conservative rate, 100 rooms at a ADR of $150 a night, and you calculate that into total capacity of room nights, which is about 36,000 something, and then you come down into the TOT of that, you're looking at about $500,000 plus per year generated right there from having that item there. That's also a key element to the vision for that particular site.
Mr. Mayor, members of the council, and I would just urge, if you do want to provide staff with direction to take a look at, again, this blended use idea, I'm happy to see that you have a planning commissioner here. I think it would be good to also get some input and a presentation to your planning commission sometime soon.
Okay.
I agree with that.
Well, I think we have some conflict of interest here, and I just don't know if we will have a quorum to be able to change that zoning. We have council members here that were financially involved with the owners of 1783 and 1793. So I don't know if that's possible to
So I
avoid a
think
conflict
what
of
Karen's
interest.
referring to is
I'm just concerned about that.
campaign finance records, which is that one of the owners, Mitch Williams, has made contributions to a campaign, but that is not. I did ask you this question before today's meeting, so I think if you could please explain that to Karen.
Sure, Mr. Mayor, members of the council, the requirement is that you disclose the contributions you get to your campaign within particular campaign reporting periods. I'm not aware that any of you have failed to do that. Assuming that you have done that, you then are all elected council members. You can both discuss and take action on this project. If you were appointed members, for example, to the Planning Commission or to the BAR, and I mean, and this starts getting to be, it's difficult to even envision this. But for example, if you, if a member of the public had run for the council, received contributions, then didn't get elected, but got appointed to, for example, the Planning Commission or the BAR, and you had received more than $250 in the 12-month period before a vote occurred, you would not be able to participate in that vote. That doesn't apply to council members. The next thing, if as council members, and this is one of those things you have to watch out for because it can get tricky, if as a council member who was elected to the council, you then get appointed to another board, for example, if you're appointed to LAFCO or you're appointed to SB-CAG, you now are an appointed member in addition to being an elected member. If an item of business comes before the appointed board that affects someone from whom you received a donation of more than $250 in the 12-month period prior to you taking that vote, then you cannot vote on that item that is before your appointed board. But again, if tonight we're just talking about the city council, you can vote on items even if you received campaign contributions from somebody who owns one of the parcels.
Does that satisfy the nature of your concern?
No. No. And one of the reasons is because we have the landowner that has changed his plans from residential to hotel use, apparently, because he did not submit a completed application for the residential and had a lot of issues doing that. He never completed that. So I don't know why he felt that he could all of a sudden make a decision that he would put a hotel there when it clearly wasn't and isn't zoned for that. So I don't know where he got that idea. So I don't know how that comes across to the public. His donating more than $500 to, I believe, multiple members on this council. Him being able to change his plans to hotel from residential, and now asking this council to change the zoning. So if you, as our city attorney, can tell me that that is not a conflict, then I will sit and give that some thought. And I'm not trying to be a business killer for the city. I would love to see good things happen in that area, but I just want it done right, Chip.
Mr. Mayor, Councilmember Waite, the mayor actually asked me about this specific issue today. I mean, apparently, again, this is Solvang, and so all sorts of stuff just circulates. I don't know if it's in the air or how it gets around exactly, but I went to the FPPC website, specifically researched this, and no, there's not a prohibition or requirement that anyone withdraw so long as the campaign contributions were in fact reported. And that's again, it's the concern the FPPC has is the public, when they vote, get to actually know who's making contributions. And then if the voters vote in a particular way, the voters, elected officials, get to act. And I don't know beyond that any of the details about this particular property, other than, as we've heard, there was a council member involved in 2015 who I think owned the property then and explained to you why the city rezoned it in the way that it did back then.
I understand completely. I do understand what you're saying. It just looks as though council members are being paid to change the zoning on a property that they have been involved with the developer. So I just don't want that to be the public perception on
I
this
really
particular
doubt
item.
that it is the public perception, and I take exception with the fact that you are conflating a number of issues and trying to accuse us of being corrupt. I think that's what you're basically doing. Second, no, I'm
don't
going
think I- I
to
don't think I named
finish.
any
It's my
names,
turn to
Chris.
speak. You spoke for 5 or 10 minutes. Secondly, I would encourage the council to encourage Mitch Williams to come and present his case, because unfortunately, what happened, I guess it was in 2018, it was clear to me at that time that council members Joni Jameson and Jim Richardson and even Hans Deuce were coordinating with the city manager and the city attorney at the time to shut down his project. And he has email threads that unfortunately indict our planning department, Holly Owens and others. So I would love for him to come up and present his case, give him as much time as he needs to present his case, and show how our city manager and city attorney and city council lied to prevent him from moving forward on his thing. He definitely wanted to close his application and make sure that he can move forward. They didn't want him to do that. So I encourage the council to go ahead and encourage him to come up and give his presentation.
Mr. Mayor, members of the council, if I can just say, I think there may also be two concepts being conflated here, which is the concept of somebody providing a source of income to a council member, which if somebody is paying you, again, as a source of income, then no, you don't get to vote on their project. But if it's a campaign contribution that you disclosed fully on your campaign forms, you are allowed to vote on the project. There are some jurisdictions, for example, the county of Santa Barbara adopted their own rule about this. Again, many jurisdictions have adopted a rule. You haven't adopted a rule that is any different than what state law provides. If one or more of you want to, actually it would take 3 of you to direct us to do any more work on that. If you wanted us to prepare a rule, or if there are members of the public who want to create a rule and put it forward, that has happened in other jurisdictions, and you can do that. I'd also note, I'm going to guess, because the election was now, 14 months ago, that you're probably at the point or pretty close to the point where you're beyond the 1-year period that usually applies even in those jurisdictions which create such separate rules.
Can I say something?
Yes.
So, with regards to Cosmon and their report, I feel like one of the issues that he was pointing out was the zoning and the planning issue, and I think that's a bigger issue. I don't think it comes down to one individual. I'm confident that decisions aren't made up here based on one individual. That may have happened in the past. I really don't care about what happened in the past. Frankly, what we need to decide is, do we want to move forward with looking at possible solutions to the zoning issue, to the overall general plan? And if we do, we can give direction with that. With regards to specific individuals, I just don't think that's relevant. I think we need to look at the overall.
And for what is best for the entire community.
Well, that's why we're here, yeah.
Exactly.
So,
I focus like a laser beam on that. And it's about what is best for the entire community. It makes me crazy that other stuff comes into it.
So if we're interested in doing that, I would recommend that we give some direction on how to deal with these. Obviously, there's some zoning issues in that area. I mean, there's all those different plots of land. So we need to find out how we're going to, if we want to go forward with something on that land, what are we going to do about the zoning? Because obviously it's not going to work the way it is.
I think this is something we already agreed as a council 6 months ago. We'd like to see something happen here. Unfortunately, there was a lot of turmoil within City Hall in the last 6 to 8 months. So I think they have, do we need to give you direction, or do you already have
We
it?
do. So actually, the direction that we're really looking for following the presentation is for you to give direction on, once again, a two-prong potential extension of contract with Cosmont. One would be their particular working with the city and all involved parties, including the county, the sheriff as part of the county, the courts, and everybody involved, as well as the private owner, and have those conversations and meetings, and then come back to the council and give periodic updates on those. And also we can include the planning commission as well on that step for the specific site. And then whatever that work is through June 30, then we could continue to develop that project into the next financial plan. Another part of that is the bigger economic development issues, which includes the zoning that will need to happen specifically for that site, as well as other potential rezoning that maybe has to deal with, different type of TRC that could address our needs for housing, as well as some of the overall vision of the council to have more experiential experiences. So that is another part that they can work with us on, and also help us develop different financing mechanisms that we could use in the city overall, and also with the next financial plan to start to develop those infrastructure needs that we all know we need to address for water, sewer, traffic, and other needs.
Parking. that
Can
kind
I
of
add,
thing.
can I add to that as well? I mean, if this is something that the consultants think that when you have so many hands involved in this one property, if it's not, if we really think it's not going to be doable, I don't want to spend another dime on this. But if we think it's something that can really happen, then I do want to pursue this.
Right. I mean, it's definitely with challenges because we're dealing with a private person, we're dealing with a county government, some operating, units in there. I have spoken with the county CEO about a month ago, I want to say, and they are not opposed to us
Okay,
talking
it's a step
to
in the
them.
right direction.
And it's a
as long
step
as
in the right direction. And
There's
we
no
really-
huge roadblock. There's
Right.
no, okay, the senior center's not going to do it, not in my backyard. We don't know that.
Obviously, it will take some kind of an agreement for all
Correct.
parties and some financial investment for
Correct.
us to move us forward.
Does this economic development plan include other parts of the city, or is it just focused on this one little area?
Well, I think the aspect of us continuing to work through the zoning conversations is where we get into the bigger picture and perhaps bigger visioning, and how do you really want to see the general plan update and the zoning update going forward.
The reason why I bring this up is because I would love to see some analysis of a walking promenade that we've discussed many times. What would that cost? As well as some of the ideas that we're talking about, turning some of the parking lots into something more productive other than just a parking lot. So is this part of your plan too?
That would be my imagining, that yes, in the next, between now and June 30th, we begin to have those conversations, have some conceptual conversations about the vision and how all of that could come together. And then with the next financial plan, you can actually start developing.
How can we make, as a council, how can we make your job easier by giving you more a concise or clear sense of vision for the city? Do we need to have monthly meetings or one big meeting once a quarter? What would make sense for
Right.
you?
I think we've definitely talked somewhat about the vision and the different, engagements with the public. We have a few parallels going on with marketing and tourism and developing a subcommittee there. We also have the BAR discussion, what that needs to be, and then we have this economic development, and all of that is in part informed by that vision and that brand, or whatever you want to call. So I think the clearest direction could be as to how, for this particular item, how do you want this economic development conversation to also be informed by that vision and the branding. You could, involve some of those other committees in this. You could establish some other committee, or you could just direct us to come back with another strategy for public engagement on this. I think that bifurcating too much public engagement with those three parallels is too much, so we probably want to have some sort of concise input into this process.
Yeah, I mean, I think our consultant did a very good job in explaining our needs, where we are losing money, where we have potential to bring in money. They did a very good job. personally, I have no issues in moving forward with this. I'm fine with that. I mean, I'm good on voting on this. I just want to make sure it's done correctly and that we're all on board and there is no conflict, which our attorney so graciously has explained to the public that there is no conflict of interest here. Thank you.
So
And I just want to say, Karen, I do appreciate your concern about that, and I too I want to make sure we're doing everything. So if there's anything I always want to be informed, and that's why I did ask these questions of the city attorney. Prior, I also asked these questions of the prior city attorney, but I wanted to even make sure I get the same opinion from both, and I will actually say that I have now received consistent advice from both attorneys. Campaigns are separate items. You could campaign on something and run around saying that you want to put Section 8 housing on, 246, and it's a great idea, and you can take contributions from the people that want to put in Section. Yeah, you can. That is why you disclose those things in your campaign finances. You're allowed to run on those types of items. That is the public's, the benefit and why you run campaigns. That's why I think campaigns are so important around transparency, because it's really important that you're getting word out there to the community on the items that you stand for, not only just to inform them what's going on and what you stand for and why to vote for you, but what your goals are going to be when you get into office. And I made sure I wrote out a very detailed campaign that's on my website. Anyone can go check it out anytime, and I do that out of transparency, because if I start going way off the goals that I told everyone, I get in here and say, hey, I'm going to stabilize water rates, and next thing I know, I'm in here jacking all the water rates up, and this is beautiful, then, I would like the public to be able to hold me accountable for that. So with that,
I've got one more comment. I think that we need to consider putting together an economic ad hoc committee to work with Cosmont to help sell this idea, some of the ideas that we've been talking about to the community. I think that the staff can do a lot of the work, but certainly I think the council should have an ad hoc committee.
I mean, the other aspect is Cosmont basically said it's not a great place to do it. I mean, he basically said with all the difficulties of it, it's going to cost a fortune to do. So do we even have the money to go through with something like that? I think it makes more sense to look at the general plan, look at the zoning aspects of it and say, is this correct? Is it zoned correctly? It looks, obviously looking at that map, it looks kind of like it's just all over the place. So I think that's
if that map went through LAFCO, they would have laughed. It doesn't have to. I'm just making the joke.
No, I think it makes more sense to look at that and look at the general plan compared with the zoning and get that figured out before you actually go into exactly what's going to be there. Just what makes sense for the city, and maybe there's other aspects that are less expensive that we can do that'll bring more people or money, whatever, to the city that makes more sense at this time.
Well, I think you made a good point earlier, Chip, but, it could have been zoned TRC the whole entire time. It was probably, like Ed was explaining earlier, rezoned for certain purposes, but there's other ways of accomplishing the same thing while still keeping the original kind of plan that was intended for that space.
And that's why I did bring up the question where did the consultant intend to put the housing need, and he explained possibly on Maple.
So am I to understand that my fellow council members don't think we need an economic ad hoc committee?
I don't think we do.
I think we disband or put on hiatus all of the ad hoc committees.
It's different than a standing committee. This is a true ad hoc committee just to work with Cosmont for the next
Well,
few
if
months.
we're going to continue we're talking about extension of the contract with Cosmont. I guess it needs to be determined what is the purpose of extending the contract with Cosmont.
Mm-hmm.
What are they going to provide, and do we want that provided?
Right.
So, again, you're not addressing my question.
To
Clearly,
form an ad hoc committee?
Yeah.
Go nuts.
I don't think it's personally necessary at this point. I think, I'd like to ask staff at this point, you've heard feedback from the council. What are some recommended next steps that we could take to accomplish the general vision or goals that we're looking for here? Obviously, a lot of it, you go to do anything, is going to take community involvement and buy off. So that's an aspect that Cosmont could be good at doing. But I just want to make sure we have clear deliverables in the contract, so we're not just starting kind of a spending spree.
Can I add one thing too? I'm sorry. If Chris, if your desire is to, I understand what your vision for Solvang is. If your desire is to work with Cosmos, should we increase or extend their contract? I would be willing to work with you and he on something like that if you wish, just so that you know that going forward. Go ahead.
That's right. As far as the elements of the contract, if you look at the packet page 226, you have a draft proposal from Casmont with specific deliverables to continue to work again on a specific site, to have those specific conversations with the stakeholders who are the owners of the different parcels on that site, to come back to council and update the council for that specific site at the same time as looking at the bigger zoning issues and coming up with recommendations of what may make sense for the city of Solvang to satisfy all of its blended needs and uses in raising the TOT, the retail, and then housing element of it.
Good task.
Mr. Mayor, members of the council, and I had provided a further suggestion. It's really focusing on their work plan number 2, where they talk about guiding the city in appropriate zoning considerations to match the vision, and then say, e.g., TRC. I think from listening to the Cosmont presentation, I think that one of the things that you may very much want to look at is, and I think it could be some relatively minor tweaking of what can happen within your TRC zone, and you can do that either as, you know, as part of looking at this site specific, or you can look at it as the overall TRC area, and I think having Cosmont's help in that would be great.
I think I feel very strongly that we don't need an ad hoc committee, because I think that it would be more efficient and more effective for an unrelated third party to go out and do the public outreach to the private landowners in this type of a situation.
I'm okay with either way.
So, Chip, my hearing from you, there's 2 things. You made a suggestion earlier that we could direct staff to look into some of your ideas around zoning, right?
Yes, I believe that we could come back to you within less than a month with some suggestions on changes to the TRC zoning language consistent with what, again, Cosmont called blended use.
Okay.
I guess one of my questions would be, I agree with that, and that's very specific, and then there's a very specific deliverable on a specific site, and I think the other component on this is there a desire to continue with Cosmont's involvement in looking at what would need to be done with the general plan update, because eventually, in addition to the TRC specific, to really resolve some of those traffic issues and whatnot that also impact TRC, we'll need to have some updates to the general plan where a company like that could be an additional facilitators for us in that process.
Sure.
Okay.
Yeah, I'd like him, I mean, if he's going to do this, I would rather he didn't just focus on that site, but it was also more of a TRC, kind of like his contract stating, general zone. I mean, I'd love to hear the walking promenade and those types of ideas incorporated into a report and the viability of it. So,
And this is why I'd like to see an economic development committee, because there's so many pieces here that need to be discussed, or at least discussed and brought into in terms of priorities.
I'd have no problem with Cosmont putting together this stuff and then meeting with an economic development committee if they want to sit down and talk to him about what he's put together, and I don't have a problem with that.
I'd like to move that we go ahead and form an economic development committee to work with Cosmont for the next, until his contract
So I don't think
expires.
that's really, we could even do that tonight on the agenda.
Mr. Mayor, members of the council, I think that you at least need to, and I would say first, although you could probably do it in one motion, but you need to at least deal with what's on the agenda, which is whether you're going to extend the Cosmont
Right.
contract or not.
What a concept.
And then again, because it's not really necessarily on the agenda tonight, you could come back, you've got a meeting that is, gosh, in like 5
Monday.
days. You could come back on Monday with the concept of an economic development
Right.
committee.
So I'd rather do that. So I think
let's do
the and I personally kind of more agree with Karen on the idea of not having an ad hoc on it, because we got rid of those committees. I don't want to start adding them. The other element is I think that it's really key that you let Cosmont do their job and work with the community on what could be done there. And the less political that is, I think the better. Whereas if it's like going through this economic development committee and stuff, I just see that as just more politics involved.
And this is a really
So-
stupid question, but could Chris sit down with him and just
And
chat
Chris
one-
can sit down with Cosmont anytime Chris wants to sit down with Cosmont. So
Mr. Mayor, I would just say, you cannot have 3 of you
No, correct.
Right.
together and meet with him, and you cannot have the 3 of you, you can't do a serial meeting, and you can't use him as the hub for a serial meeting. Otherwise, yes, you can
Understood.
meet with him.
I read
All right.
about that recently.
So,
I think you guys are missing the opportunity with respect. I'm not going to argue this anymore. If you guys don't want it, that's your choice. But the trying to convert or create political will for what we're trying to do here is going to be very important, and that's where the ad hoc committee comes in. It's
So
not a standing
I just think
committee.
it'd be cleaner though, Chris, if we just dealt with the agenda that's here tonight. If you desire to have more discussion around creating the ad hoc committee, we can put that on the next agenda, and then the council can decide the next agenda whether they want an ad hoc committee or not on this.
That's fine. If you
I
wanna put
I
on
think
the
that's
agenda,
just the cleanest way to
more
do it.
transparent, people can talk about it or whatever. or give their
Your
opinion.
microphone. And then, so anyway, what I'll do is I'll make the motion
Okay.
that we move forward with giving, direction as the city attorney Chip specified earlier with regard to zoning, and continue the contract with Cosmont to do the community outreach option and come back to the council with potential options.
Okay, I'll
Does that make
second
sense?
that.
Okay, it's been seconded by Karen.
Member Tim Clark,
Yes.
Councilmember Jarnes,
Yes.
Councilmember Johnson,
Yes.
Councilmember Wade,
Yes.
Mayor Tucson.
Yes.
The motion carries 5-0, Mayor. Thank you.
Okay. On to item number 4. Can I get a title readout and staff report? Do we need a restroom break real quick? It's now 9 o'clock. Yes, let's take a 5-minute. Patrick's got to change the DVD. We have item number 4, title readout and staff report.
Thank you, Mayor. Item number 4 is the 2020-2021 Financial Plan Development Policy Direction. City Manager will report. Thank you.
So I think this will probably be a pretty easy, short item. What I'm really looking here for is a consensus and policy direction from the council on how you would like to proceed forward with the next financial plan development. Traditionally, the city has been doing a pretty simple 1-year budget exercise, and the city has been looking at its operating budget at a separate time than at the capital improvement program. Well, really to achieve whatever goals, outcomes the council wants to achieve within the budgetary time period, you really need to align your budget for operations as well as the capital improvement program. So that is one of the recommendations that's here in front of you, is that the council, consider a 2-year financial process instead of 1 year, because it is better aligned, especially with some of the goals that you may have on the capital improvement program side of things in a 2-year span, just because of how long those projects take place. And it also gives the staff direction for a longer period of time as to what they need to achieve over a 2-year financial plan. That's kind of the more best practice recommended model. So the recommendation is to transition to a 2-year financial plan, to have operating budget presented to you at the same time as capital improvement program plan. You would be adopting a 2-year financial plan and then just reaffirming or making adjustments annually, because the city is actually legally obligated to adopt an annual budget. I also recommend that you continue with the long-term financial forecasting, which was introduced to you with this current budget for 1920, which really looks at your sort of the business model and long-term sustainability, so that you can make your decisions on budget allocations from a perspective of, how much money you have, and then most efficiently allocate it towards the outcomes that you want to achieve within that period of time. And that goes to the little slide over there that, it's also all about the efficiencies that we've talked about. It's the doing more with less, which we're looking at in terms of out of the budget allocations. You want to make sure that you have adequate performance. We create some performance metrics for each of the components of the city operations, and that leads you to outcomes, and you review that for each financial plan. So with that, the proposed schedule would be that in March of 2020, we would present to you financial forecasts so that you can look at your financial position for each fund. You'd have the forecast showing you how much money you have available to allocate. Out of that process, you can make decisions on how you want to allocate that money and what you want to achieve over the period of time. Then in May 2020, we would come back to you with a conceptual financial plan. So it would tell you how much money it would take and what we propose that should be based on your direction accomplished over the next 2 years. You can give staff policy direction at that point. And in June 2020, by the deadline to adopt the budget, we would then come back to you with an actual, precise financials and the budget put together that you can adopt at that point. Some of the alternatives that you could have would be to continue to stay in a 1-year status quo budget. That is not my recommendation. I think a 2-year plan really gives staff better direction, especially on the capital improvement plan program. And then you could also consider, public engagement, but I think that where we already have a lot of public engagement going on with marketing tourism, like we just talked about, the branding, economic development. So in this transitionary period of going into a 2-year financial plan, I don't think that we need to have that component at this time. I think that maybe, 2 years from now, that may be a good venue to, merge into development of what you want to do over a 2-year financial plan. But I think we already having those conversations through those other venues that are probably more relevant at this point. So I'm looking from you I'm proposing some changes in how we go about developing the next financial plan compared to how the city used to do it in the past. So I'm just looking for consensus from you whether you think that this is the appropriate direction and you're in agreement with the steps in this process.
Thank you. Are there any questions of the staff report?
I have one. And you are completely comfortable with that 3-month time frame to get that done?
Yes.
With the
so-
staff that you have wearing 3 hats?
Yes,
that's
I
attainable?
must say that I have some great help in the accounting department that takes a lot of relief of me in terms of, plugging in numbers together.
Good.
I've already had conversations with department heads that I have 2 of, which actually is less process in a way to get this done. So staff will actually get going on this a little bit earlier. We'll have conversations, as early as February in terms of what needs to be achieved, and then obviously align the final product with
So am I hearing
policy direction.
less management overhead equals
Sometimes it does in some ways.
more efficiency?
Okay, that answers my
All right.
question.
Are there any questions of the staff report? Okay, seeing none, we'll go to the public for public comment. I have no speaker slips. We now have 1 person left in the room. Would that 1 person like to speak? That 1 person's not raising their hand, so I will move back to the council for discussion and action. I'll just start off by saying that I'm definitely would love to move to a 2-year budgeting cycle. I think the council's doing a good job of kind of finding ways to start shaping things. I'll just talk about the IDK contract the other day, the where we can start taking things out of that budgeting type cycle that goes on every year. And I really love the kind of 3-stage March 2020, May 2020 leading up to June, because it's really letting the public kind of know where we're going with the budget as you go through it. And by the time you actually get to the budgeting cycle, it's not just everyone trying to consume everything all at the last minute and trying to understand until they finally probably just get frustrated and just say, yeah, approve the budget and move on. So I really like the aspect of there. It'll provide a lot more transparency and ability for the public to comment through the process, and for the council to guide it down the right path and have forecasts and everything that's going to really let us know where we're going so that we can best control cost.
Yep.
So I think that's a terrific idea, and I just wanted to say thank you and great job. I agree. And Robert agrees. Is there anyone else that'd like to discuss on this item? Okay, I think you've received your direction. Do you need a motion?
Yep.
Okay, does anyone have a motion they'd like to propose?
I'll make a motion that we accept the proposed 2-year budget plan going forward and implement it.
And we go home. I'll second that.
Mayor Pro Tem Clark,
Yes.
Councilmember Diarnes,
Yes.
Councilmember Johnson,
Yes.
Councilmember Wade,
Yes.
Mayor Tucson.
Yes,
Motion carries 5-0. Thank you.
thank you. With that, we're adjourned.
You guys, I've got a question for you now that we're closed.